Welcome back to your Mortgage Minute from OnLendHub.ca. I'm Sarah, and I'm here with OnLendHub mortgage expert, Mooley. Welcome to the show.
Thanks, Sarah. Great to be here.
So today we're talking about something you're calling the silent renewal secret. That sounds intriguing. What exactly is this?
It's a strategy that could save thousands of dollars for Canadians renewing their mortgages in 2026. If you locked in a record low rate back in 2021, you're standing at the edge of what we call the Great Mortgage Cliff.
And most people think they're stuck with their current lender, right?
Exactly. They think they have to avoid switching because of the stress test. But that's a myth that could cost them thousands. Today, we're breaking down the silent renewal switch, a way to beat the payment shock without requalifying.
Okay, let's start with the numbers. How bad is this payment shock people are facing?
The numbers are staggering, Sarah. In February 2026, the Bank of Canada held its policy rate at 2.25%. While that's lower than the peak, it's still a massive jump from the ultra-low rates of 2021.
Can you give me a real example?
Sure. Let's say you're renewing a $500,000 mortgage. You locked in at 1.89% back in 2021. Now your bank wants to renew you at 4.09%.
Okay, so what does that mean for the monthly payment?
Your old payment was around $2,100 per month. The new payment jumps to over $2,650.
Wow, so that's a payment shock of what, about $550?
Nearly $600 a month. And here's what most Canadians don't know. They assume they can't switch lenders because they won't qualify under the new 5.25% stress test.
But that's not actually true.
That's where the silent renewal switch comes in. There's a special rule called the Insurable Straight Switch that allows you to move your mortgage without a new stress test, as long as you're not increasing the loan amount or amortization.
Wait, so you can skip the stress test entirely?
In certain situations, yes. And that's the secret your bank doesn't want you to know about.
All right, so who can actually use this strategy? Is it available to everyone?
This applies to about 1 million Canadians renewing this year. Specifically, it works if you've maintained a standard amortization schedule and have a mortgage of less than $1 million.
Can you walk me through a real scenario?
Absolutely. Let's say you have a mortgage in Brampton worth $750,000. Your current bank offers you 4.3% for renewal.
And they're counting on you being scared of the stress test?
Exactly. But by using OnLendHub, we search our network of over 65 lenders and find a different lender offering a straight switch special at 3.89%.
So you save what? 0.4%?
That's right. And because it's a straight switch, we use your original qualification criteria. No new stress test required.
And what does that translate to in actual savings?
That 0.4% difference saves you $300 every single month. Over a year, that's $3,600 back in your pocket.
Just for making one phone call, essentially.
Exactly. That's the power of shopping around.
Okay, this sounds almost too good to be true. What's the catch?
There are definitely some limitations we need to be upfront about.
Let's hear them.
First, a straight switch means you cannot take any new money out. If you need $10,000 for a home renovation, it becomes a refinance, and the new stress test does apply.
So this only works if you're just moving the existing balance?
That's correct. Second thing to watch for, legal and appraisal fees. Many big banks register your mortgage as a collateral charge.
What does that mean?
It means switching to a new lender is technically a new setup, which can involve higher legal costs, around $900.
So you might have to pay that up front?
Here's the good news. At OnLendHub, we use our database of over 7,000 products to find lenders who will actually cover these fees just to get your business.
So they'll pay the legal fees for you?
Many of them will, yes. You just have to weigh the upfront cost against the monthly savings to see if it makes sense.
And that's something you help people calculate?
Absolutely. We run those numbers for you, so there are no surprises.
All right, so if someone listening right now has a mortgage renewing soon, what should they do?
Here's your silent renewal action plan for 2026.
I'm ready. What's step 1?
Start 120 days early. Do not wait for your bank's letter showing that 25% payment jump. Most lenders allow us to lock in today's rates for 4 months.
So you get rate protection for 4 months?
Exactly. If rates drop, you benefit. If they rise, you're protected. Step 2, pull your original mortgage documents and check if your charge is standard or collateral.
Because that affects the switching cost?
Precisely. And step three, don't just renew, negotiate. Even if you want to stay with your bank, showing them a switch special quote from OnLendHub is the fastest way to get them to lower their offer.
So, you can use it as leverage?
Absolutely. This strategy can drop your bank's rate by half a percentage point instantly.
Even if you don't actually switch?
That's right. Here's the key insight, Sarah. Your bank doesn't have a loyalty rate. They have a convenience rate. They're charging you more because they assume you won't shop around.
So being proactive saves you money either way?
Exactly. You avoid what we call the loyalty tax.
This has been incredibly helpful. I think a lot of people are going to want to explore this strategy.
The 2026 mortgage cliff is real, but you don't have to fall off it. At OnLendHub, we work with over 65 lenders and over 7,000 products to build your safety net.
So what's the best way for listeners to get started?
Don't settle for your bank's first offer. Visit onlendhub.ca, that's ONLENDHUB.ca, and book your free 30-minute consultation today.
And you'll run the numbers and show them their options?
Exactly. We'll find your silent switch secret and show you exactly how much you can save.
Perfect. Thanks so much for breaking this down.
My pleasure, Sarah.
And to everyone listening, this has been your Mortgage Minute from OnLendHub.ca. We'll catch you in the next episode.